Hey, my name is Connor, and welcome to Crypto Empire, where we dominate the crypto markets. In this video, I'll be showing you my top 3 chart patterns that I have been trading in this bull market to make insane gains. Right now we're in a bull market, so we won't be focusing on any bearish chart patterns because we need to capitalize on the opportunities that the market is providing us with every single day. So if you are a day trader or a swing trader and you want to learn my top 3 chart patterns that I use to trade in this current market, then make sure that you stick with me until the very end of this video. And if you're new to Crypto Empire, go ahead and hit that subscribe button down below, share the video with your friends, comment, like, and turn on all bell notifications so you don't miss any future videos. And let the gains be with you. So to start this video off, I want to explain a very important concept that you must understand if you want to trade these chart patterns successfully. And that is having the ability to identify the current market trend. I want you to remember a phrase. I want you to never forget it. That phrase is, the trend is your friend until the very end. Never forget that, because if you start to trade chart patterns but you don't identify the trend first and you start getting stopped out and you start losing money, it's most likely because you were trading against the trend. If you want to put the probability in your favor, well, then you need to identify the trend and trade in that direction. So right now we're looking at Bitcoin on a 1-day price chart, right? Each one of these candles represents 1 day. And it's pretty obvious to me, being that we did break this high, it's pretty obvious to me that we're now in an uptrend, right? We have price action marching higher. We can draw trend lines as well. And one really simple way that I use to identify the trend is to use moving averages. I use EMAs. So I have the 21 EMA, the 55 EMA. So 21 is gold, 55 is purple, and then the 200 is this red line. So basically what we look for to identify the trend is to have them in descending order. You want the lowest moving average, the gold one, to be on top, you want the purple to be in the middle, and you want red on the bottom. And this signals that the average price over those number of days is going up. And that is just a very simple way to identify the trend using EMAs. So we can see over here from October and up until May, April, when the market crashed, we had the gold first, we had purple in the middle, and we had red down below. This signals a very strong uptrend. Over here in May, when the market turned on us, we had what's called a death cross, where the golden 21 EMA first dropped beneath the purple 55, but the true death cross is when the lowest EMA drops below the 200 EMA, which is the largest one. So now we have a golden cross where the 21 EMA has now crossed above the red 200 EMA. So we know with a very high degree of probability that we're now in a confirmed uptrend. So if we're in an uptrend, we look to trade bullish chart patterns, which takes me to my first chart pattern, and that is the ascending triangle. So if you are in my free Telegram group or you are in the Discord group, you know that this has been my favorite chart pattern to trade in this current market at this moment in time. So basically an ascending triangle is when we have price action creating consecutive higher lows. We have a low here, we have a consecutive higher low, but we have horizontal resistance, right? It's like a roof. Price keeps on hitting the roof, comes back down, but makes a higher low, tests the roof again, higher low, and then eventually it just bursts through the roof, right? It's just one of those big green candles going straight through to the moon. So if you guys did watch my Cardano video, I did outline a breakout right here at $1.50. So I pretty much said, I'll cue the video clip right here. Regardless, what you need to be looking out for in the meantime is this breakout, right? We want to see what happens over here at $1.50. I do expect to have this breakout to the upside, and I would look to take chips off the table, like I said, at the 6.618 level and the 1.618 levels. So I did call this ascending triangle breakout for you guys. I hope that you did take this, because this was just so textbook. When you see this chart pattern playing out, it's really a very high probability setup, especially in a bull market. We had the horizontal resistance over here at $1.50, and we had this steep ascending price action right into the horizontal resistance. As you can see over here, we started to consolidate right underneath the resistance, and then bam, we bursted through, and we made a high of $2.25. And that's not quite at the all-time high up here at $2.47, but that's coming soon for Cardano. So this is one example of a ascending triangle chart pattern. Some people like to call it an ascending wedge. So how to actually trade this chart pattern is you look for the point of horizontal resistance and you look to go long on the breakout. I'll give you guys an example from the Crypto Empire Premium Discord group. I did post this trade on August 6th. I said Cardano has been in huge accumulation for months and it's most likely going to break out pretty much. So I did outline the trade as so with our entry down here at $1.41. And let me explain why I use $1.41 as the entry. Basically, we had these candle wicks going up here to $1.40, and this is a supply zone. We have a drop, base, drop, supply zone. And pretty much I was saying the second that we break out of these wicks, I think we're going to pump higher. Okay, so I did enter this one before this horizontal resistance. However, regardless you want to play it, this was a riskier trade that I took in the Discord, right? It doesn't really matter though, because I saw the horizontal resistance. I saw these long wicks into the area, and I said when price breaks above these candle wicks, I'm looking at these candle wicks right here, that I'm going to enter long on a breakout. And as you can see, this one did work out very nicely. I'll give you another example of an ascending triangle before we move on to the next chart pattern. And this is on Pancake Swap. So with Cake, I also put this one in the Discord. I'll show you guys right here. So I said Pancake Swap melted faces during the first half of the bull market. Outline the trade like so with our entry at $17. Okay, so I still have it right here. And you see I have these 2 arrows. That's a double bottom. That's our next chart pattern. But basically, what we look for, again, is this horizontal resistance. Right? We saw this wick into the area at $17. We can look over here. We can see that it has been used multiple times as an area of support and resistance in the past. We have a touch here. We have multiple touches here. Wick in the area here. Used as resistance over here. So I said with a high degree of probability, when we break above $17, this thing is going to start running. And as you can see, we had the ascending price action. Price was making higher lows. What happened? We had the low down here at about $10. Then we just start going on a steep uptrend, creating higher lows, higher lows, higher lows, higher lows. And then we approached the horizontal resistance. We had one wick tested. This is a daily chart, right? We retraced back down to the trend line, and then we had a bullish engulfing candle with the breakout, and that is when I did enter long. And as you can see, price did retest the area of the breakout at $17 multiple times. So keep this in mind with all these chart patterns that I'm showing you. The breakout line is a critical level of support and resistance on the chart. So when price breaks above it, it most likely will test it again. So if you do miss the breakout entry, then you can enter long on the retest. It doesn't always retest, but it often does. So with that being said, if you want to take on more risk and just guarantee that you're going to be in the trade, well then go long on the initial breakout. If you want to be more conservative, go long on the retest. But sometimes you're just going to miss the trade because it won't retest, it will just take off. So this is another example of an ascending wedge chart pattern. So very, very high probability trade. This has been my bread and butter recently in this bull market. It's just playing out on so many different charts. But regardless, let's move on to pattern number 2, which I did mention is the double bottom chart pattern. So the double bottom, basically what it is, it's a strong impulse wave down, and then we correct a little bit. We usually test the supply zone. As you can see in this example, we have a drop, base, base, and then drop, creating a supply zone. And then when price corrected off the bottom, it wicked to the supply zone, and then it came and formed that second double bottom. So what classifies a double bottom to me is when the second low is higher than the previous first low. As long as we have no candle wicks or candle bodies go beneath the first low, then I would classify this as a double bottom reversal chart pattern. So we can hop back into the charts and I'll give you some real examples. First one is right here on Pancake Swap that I have outlined for you. Basically, we had the huge sell-off over here in May, and we created a low. And then we retraced. As you can see, we can draw a horizontal line here where we did retrace to. And if I were to drop this down to a lower time frame, right now we're on the daily, we would see supply zones up in here. But I don't even have to drop it down. You can just see these candle wicks. You can see all these candle wicks in the area. This tells us that there's a lot of liquidity there. So most likely it's a critical area on the price chart. We know it is significant, so we mark it. Okay, so we had this steep impulse wave drop down on a cake. We retraced up here to this critical supply zone, support resistance flip, and then we touched the double bottom, and then we started bouncing, started moving higher. So this is one example of a double bottom. I'll also show you another chart where we did have a double bottom play out. This trade is actually active right now in Crypto Empire. As you can see, we did just hit target number 1. This is on Tron TRX. So with Tron, double bottom, you may also have heard me refer to it in the past as a W chart reversal pattern. However it's referred to, just know it's the same candles that are playing out, the same pattern on the chart. You can call it whatever name you want. You just have to know how to identify it. Pattern recognition in trading is absolutely key. Once you ingrain these patterns in your mind, you're going to be able to read the charts like a second language, and you're going to have no fear, no hesitation when you're taking these trades, because you trained your brain to identify the high probability trades, and you're just going to be able to execute. So with Tron right here, we have the W double bottom reversal pattern. Basically, we broke down, we created this one low here at 4.6 cents. We came back up, we tested, we have this drop base drop supply zone. I'll mark this out. If you guys want to learn more about supply and demand, I have 2 videos on the channel thoroughly explaining the concept. It's over like 40 minutes of content, so go and check the trading playlist to watch those. I highly do recommend it. You need to know all of this stuff to be, well, you don't need to know all of this stuff, but it will greatly help you out as a trader, especially if you're just starting out. The more you know, don't over flood your brain with information, but good information you can really never get enough of. You should always be a student of the game. I am always trying to learn as much as possible as a trader, even though I've been doing this for over 4 years now. So double bottom, we had the breakdown. We retested the supply zone. This would be the neckline. As you can see, it did use a little bit above as the breakout entry on Tron at 7.2 cents. So we had the first impulse wave down, then we had the correction up here to the supply zone, and this would be your neckline, right? So we looked to enter long on the breakout of the neckline. So we marked it here with the breakout entry. Then we retraced back down, formed the second bottom, right? And then we start marching higher. And basically what we have here is another ascending wedge in a way, where we're making this ascending price action towards the horizontal resistance. We break out, we retest the breakout area, and then we just start running. Okay, so this is a double bottom chart pattern. Learn this one, you'll see it play out over and over and over again. I'll show you one more example before we move on to the third. Right, I'll show you it on Bitcoin. So with Bitcoin, we also have a double bottom right here. Right, we have this strong impulse wave down, and then we corrected to the supply zone. As you can see, we have a drop base drop supply zone, and then we formed the second bottom, and now we start pumping much higher. Okay, so definitely look out for this chart pattern, double bottom. It's a classic reversal pattern, and once you learn how to trade it, it's very high probability profits. So with that being said, let's move on to my third pattern for this video. That is the symmetrical triangle. So the symmetrical triangle is more likely to break out in the direction of the trend. So as you can see, there's 2 examples right here. There's a bullish symmetrical triangle and there's a bearish symmetrical triangle. And that depends on which direction the impulse wave, which is this first all the way to the left, the impulse wave is here. That is the first wave of the move. So if we're in a bullish trend, obviously the impulse wave is going to be up. We test the top of the triangle, we test the bottom, and we start having this consolidating price action. It gets narrower and narrower and narrower, and eventually it will combust. So if we're in a bullish trend, we look to trade long on the breakout of the symmetrical triangle. Now, we do have a symmetrical triangle example. This trade also posted in the Discord group, Dogecoin, believe it or not. I don't like Dogecoin at all as a project, but as a trader, we only care about volatility. So as the saying goes, don't hate it, don't date it, just trade it. So with Dogecoin in the symmetrical triangle, I'm going to drop this down to a 1-hour time frame so we can get a better look at what's going on exactly. So basically we had the impulse wave right here, right? We came off the bottom and we made this first impulse wave. We tested the top of the triangle. Now we test the bottom again. As you can see, it's a pretty significant level on the chart. You can mark this out, take that as a long entry with this rally base drop. It's a support resistance flip, I would call it. I'm looking at right here. And as you can see, if we draw a line, that was tested on the bottom of the symmetrical triangle. So that's price action trading. If you want to learn more about price action trading, there's a lot of information in the Discord. There's a full course about it. So symmetrical triangle, impulse wave, then we consolidate, consolidate, consolidate. And now this yellow line was the breakout entry. Reason I picked the yellow line is because we can see we have this one chart pattern, or this one candle wick, I should say, right here. We have candle wicks into the yellow line over here as well. So we know that this is an area of resistance on the chart. So most likely when we break through the resistance, we'll test it as support and then we'll start running higher. And as you can see, that's really exactly what we did do here, right? We broke out of the symmetrical triangle. And now notice over here how we dropped down significantly back into the triangle range. So this is your opportunity to get long if you didn't get long on the initial breakout. How would you know to get long down here at 25 cents on Dogecoin? Well, one thing that I use time and time again is the Fibonacci price retracement tool. How I use the tool is I take the high, the local high of the move, I take it down to the low of the move, and I look for the golden pocket. As we can see, the 61.8 worked out perfectly here. We have the candle wicks right into the golden pocket, and then we started marching higher. Okay, so if you don't get long on the initial breakout, look to get long on the golden pocket Fibonacci 61.8 entry. It doesn't always retest the 61.8, but it often does, like I said earlier. So if you want to take a more conservative approach, you would look to go long on the retest of the golden pocket. Now, very quickly, I will also explain to you how I do identify profit targets. And I look at the chart, I look at critical levels of support and resistance to use, but I also use the Fibonacci extension price tool. So for the Fib extension, what I do is basically take the high, drag it down to the low it created after making the high. And the first one that I look for is the 0.27, especially when I'm trading this as an hourly price chart. So this is like a day trade. It might take 2 days for this to play out. But basically the first one is the 0.27. Okay, and as you can see, it didn't quite hit the 0.27 on the first run up over here, but it did just nick out the 0.27 the second time. So you have your take profit order already set in your exchange. Bam, that's a winning trade. So in this video, I showed you my top 3 chart patterns that I'm currently used to trade in this crypto bull run. These patterns are very high probability because we are trading in the direction of the trend. The trend is bullish, so we look to go long when these patterns start to form on the chart. If you are new to trading, I highly suggest that you ingrain these chart patterns into your mind, because one aspect of trading that many newcomers don't understand is pattern recognition. When you can recognize these chart patterns, you will be able to see them play out before they happen, something called foresight. When you have the foresight to see it happen before it actually does happen, that gives you the confidence to enter into the trade and book those profits. So if you learned something new in this video, I would greatly appreciate it if you liked it and you also commented down below. And if you're new to Crypto Empire and you're not already subscribed, go ahead and subscribe to the channel for more content like this and much, much more. And also turn on all bell notifications so you don't miss any future videos. And my name is Connor from Crypto Empire, and I will see you in the next video.